Hello, hello, hello. Welcome to Stock Trades. Hope everything's doing well. Happy Friday. So sorry about that. It's been some time since we've talked. Our lives are about to be dramatically decreased. We went ahead and done a lot of updates in the past 6 months. I'm approaching the second half of the year, which is going to be incredibly busy. So the lives are going to be, definitely, hindered. So that, with that, all the due diligence and research is going to stay the same with inside the research edge. It's just the lives take so long with the videos and all the stuff that goes behind the scenes. Versus, research edge, I could just type it in and type the research. So I'm going to go ahead and release you on the YouTube, world, the research that we've been talking about the past couple of days, the past week, for Clover Health. There's some incredible findings that we found. So let's just go ahead and do that. And but first, I want to update you on a drama. There's been some Medicare Advantage drama, right? Some software drama, right? So let me just update you guys very quickly. Let's go to the comment sections. Thanks, Sal. I was able to successfully explain the balance sheet of my company, good, to my coworkers today. Something I wouldn't have been able to do accurately a year ago. And that's the beautiful part about this, right? The beautiful part about this is to, Sean, is to create a environment where it's fun. It's fun to talk about companies and tell the story of what the company's doing, because you can tell a lot, right? How you doing, Clove, to retirement? What's going on? Can't wait to, hear the thoughts. Excellent. Smash the like button. I appreciate you guys, right? What's going on at the casino today? Okay, right? All right. So, let's see. First things I do want to just point out real quick, very quickly, if I may, shout out to Andrew. Andrew is going to be leaving Clover to ArtSite, which is and is going to be the lead marketing and communications director there. And I just want to wish you, Andrew, wonderful journey. That these folks are lucky to have you. I appreciate you a lot, Andrew. Thank you for what you've done for Clover Health. Let me just go and read his post real quick. The last decade, Clover Health has been, it's been literally a communication crisis management disaster masterclass. And Andrew has literally batted in, and in my opinion, he's done incredibly well, right? So to name a few things, Clover Health was the first healthcare unicorn post, right? The whole 2020. And then Christmas Eve, CNBC, you got the shanking, which is crazy, right? Launching the Character Biosciences and Counterpart Health, which is part of the subscription as a service SaaS for Clover. Then launching Clover Home Healthcare, building a team from scratch 3 times, going public via a Chamath SPAC, and refuting Hindenburg shenanigans, which he had to type up. He typed all that stuff up, right? That took a lot of time, right? And that was before AI, right? Mind you, right? So creating Clover Living magazine, and then becoming the most reviled person on Clove stock twigs with a publicly available phone number. Holy moly, right? Despite the wild ride, I wouldn't trade any moment with amazing people. Excellent work. ArtSite, if you're out there, you got a special one. I wish you the best, Andrew. You're the best. And and shout out, so I expressed my my congratulations. And Andrew, I was like, I hope that my videos that we create at Al Stock Trades has, at least from a first principles perspective, has at least showed the progress of Clover, right? And unfortunately, you can't really see it from just kind of a Robinhood app, right? And he's like, he said, Andrew responded back. He said, Albert Allen was always grateful for your unwavering support and having, at least one shareholder that wasn't calling to yell at me. That is hilarious. Yeah. He said, keep up the good work with Al Stock Trades. Right. So I'm very excited. Shout out to you, Andrew. And, best, you don't need luck. There's no best of luck for your next career. You're going to smash it out of the water. if you could deal with Clover Health, and holy shit, have you dealt with it? Holy God. I would not want your job, man. Jeez, imagine having all these people. Man, I would be scared, man. Holy moly, right? Yeah, that, and you did it with a smile. So, thank you. And it's been a wild ride. And God bless you, man. All right. Please stay safe. Be healthy. I'm trying to get to the gym more often, and do you. Okay. All right. So I just wanted to give a quick shout out there. Now let me just talk to you about some drama now with someone, this person here. Okay. So it all started with CMS. Let me just show you the storyline, right? Right. It all started with CMS. In fact, let me just, if I can, should I even put it at full screen? Nah, it's silly. Yeah. It all started with CMS, right? They were out there looking for advice for any health IT areas that could help with Medicare technology. So I decided to write a Bill Ackman style tweet. And again, I don't tweet Andrew or Clover or Vivek. I think maybe in the past 4 years, I've only tweeted at them maybe I think this was my first time. Less than 3, right? I don't bother. I let them cook. I let them do their cooking, right? The only time I speak is when I see a strategic entry point like this. So I went ahead and I made a post. It got around 2,100 views, which is pretty impressive for CMS, considering they get anywhere between 5,000 to 7,000 views, right? Sorry, 1,000 to 7,000. Usually this was a pretty up there, and I think that one ended up getting 5,000 views. And so we're trying to advocate, and this is the contents. I broke, because it's so long. I broke down the tweet here, and I respectfully pointed out the Clover assistant, and I'm not going to repeat what I said because you guys already know about this. A1C, Medicare, yada yada yada, right? And then all of a sudden, this gentleman by the name of Brandon Keeler, he said, "I can't believe a Wall Street style subreddit is trying to pump Clover Health by mass comment campaign on the new CMS RFI." But lo and behold, here we are. Now, my initial thought to this is, first off, I don't like this word pump and the ticker symbol CLOVE, right? We're not trying to pump the stock. This is not the right avenue to pump it. No, we're trying to strategically be an activist investor like Bill Ackman, whom what I've learned from, and that's how I became a multimillionaire, right? And to strategically make some noise for CMS because they were asking for advice to say, hey, there's a software that literally is going to solve your issues. And he's taking it as a pumping. And I was like, why? Why is he doing that? Well, then I realized he works at another company that's a competitor of Clover. So I said, that's kind of interesting, because he's painting it in a negative connotation. Okay. So, I was investigating, and then many people were also perturbed and disturbed by his comments to a point where he says, edit. So he edited this post. Since some appear to have somehow interpreted this as a knock on Clover counterpart, I should clarify, as that's not the case. The thing is, that is insane, is they're mobilizing, trying to influence government policy to pump stocks they like. That's not what we're trying to do, right? And again, he uses the word pumping stocks as a form of, there's no intrinsic value, so you would have to resort to, doing these influential government policies to pump stocks. No, that is very wrong and far from the truth. Okay. So I investigated more, and I said, you know what? This gentleman says the pump ain't doing much yet. You may recall July 2020 when it became the next GameStop, right? And then here's the price, and then gradually it's been $3 where it's ever been since. So the beautiful part is, very quickly on the side note, he did say it's $3. Technically, it went down to 60 cents. But the fact that he's seeing $3 and it's been there ever since, That could be the new psychological bottom. I don't know. Maybe 280 to 3, right? But that's besides the point. He again regurgitates what Brandon says, pump and GameStop, right? And that's not what that's not what we're trying to do, right? That's not what we're trying to do here, guys, right? And he's bringing a lot of these people to say the same thing. And then he goes in and comments and says, yeah, mass campaigns are generally ineffective, especially this variety. I'm going to explain to you why this was wrong, because it was effective. It was effective, right? Because Kevin was invited to the White House. It was effective. And our activism actually works, and I'm going to share. I'm just giving you the story, okay? The punchline, we were right. All right, Kevin went to the White House and went to the Centers of Medicare and Medicaid and was able to speak to Dr. Oz and Secretary Kennedy, right? But before we get to this is the ending, right? Let me just bring you towards the storyline because it's important. Then someone said, let's see you do a deep dive into Clover. Tell us your thoughts. This is a great, Joshua, I appreciate you. And then he steered back. He's like, I don't know. I'm not going to do that. Right? There's plenty of pundits that are better suited to evaluate public markets than me. I do agree that Counterpart is a good product. My main thought, right? So then he starts to backtrack because it's starting to be like, what are you trying to say here? Are you trying to say that Clover is not a good company here? Right? Then another person responds, it's like GameStop, but except with people's health. Again, he's inviting this type of branding for Clover, which is a bit ineffective, okay? And here we have Gun Show, and I agree, it's nothing like GameStop, right? Right? So that's great. Okay, good, right? It's absolutely nothing like GameStop, okay? So then on Twitter, again, that was LinkedIn. Now on Twitter, he says, okay, incredible that Reddit is attempting to pump Clover by posting fake hype. Okay, he uses the word pump again, and then he uses Clover. And then he says the word fake hype. So he goes in, ladies and gentlemen, he goes in and he says that he's friendly with Kevin, okay? And Andrew Toy, I hope that you're watching this, right? He goes in and he says that he's friendly with Kevin, but yet he goes in and he says, posting fake hype. So what he's basically saying, the medication adherence that the Counterpart and Clover Assistance is doing is fake hype. He's saying the A1C stabilization and detection of diabetes 3 years early, type 2 diabetes 3 years early is fake hype. He's saying that detection of congestive heart failure and the decrease in readmission rate and hospitalizations is fake hype. He's saying that the stabilization of stage 3A and stage 3B is fake hype. And so he's saying that this is fake hype. Using technology is fake hype. Okay, so then that is when I said I need to enter the discussion, because this guy is stepping out of his lane because he is not a medical doctor. Okay? So I gave him a Bill Style Ackman response. You can see it here. And the big thing I said is, Let me show you the post here. So he says the word here, pumping, and he says posting fake hype, right? That's what he says. So I, as I said, medication adherence, CKD, chronic heart failure, that's fake hype to you, sir? Again, you are a competitor. So he's trying to damage the brand of Clover, but then he backtracks. But interestingly, he posts this on Twitter, but doesn't post it on LinkedIn, right? Okay. So I give him a Bill Style Ackman response, okay? And I pretty much said, I'm like, listen, sir, have you taken and passed the USMLE step 1 and 2? I have. I've taken it and I've passed, right? You have, first off, no knowledge basis to even make comments on what is something fake or unfake. What I'm telling you as someone who has clinical experience, being able to catch diabetes early and what Clover Health is doing is actually incredibly helpful for physicians and the overall healthcare market. Okay. So I go ahead and I give him a response, and then he comes back in and he says, I'm not critical of Clover. Okay, you're not critical of Clover, but you're saying it's posting fake hype. What did we post? We talked about the medication adherence, CKD, et cetera, et cetera. I thought it was funny that Reddit is commenting on federal RFIs in an attempt to help stocks they like. That's not what we're doing. No, that is that. Separate that between the product and the overall intrinsic value. I'm a fundamentalist. I'm a fundamental investor, value investor, and I calculate intrinsic value. Okay. And then he says it's not likely to be effective as the federal government is looking for policy ideas. Don't you think Clover has an idea regarding policy ideas, given that they can decrease the spending by over 1,000 basis points for medical cost ratio? Okay. So, and then he said, I appreciate the patriotism and involvement in the government process. Well, it's time. It's time for people like us to start getting involved in the active discussion. I mean, it's only your taxpayer dollars. So then what he decides to do after him backtracking, he decides to post a meme because that's what he's good for, right? Right? This is his, frontal lobe cephalization of the frontal lobe. And this is the best that he can do, post memes. And he only strategically just puts Reddit posting CMS comments as sure as a wild, eh? No, he also said it was fake hype and it was pumping. Okay. So he leaves that out. And then he goes in and he says, and then he puts me as Trump, right? That's fine. I'll be your Trump, right? I will be your Trump. Don't worry, right? So he goes in and he says, are you licensed medical professional? Have you passed the USMLE? If not, how could you accurately critique Clover? And then there's JD Vance. Did you even say thank you to Clover for the generational software that is the counterpart assistant? Again, funny, right? But at the end of the day, here's the take-home message. This is Kevin. He states, it is an honor to be included. This was a day ago. It is an honor to be included in the Centers for Medicare and Medicaid Services Technology Summit this past Tuesday, representing Clover Health and Counterpart. Between the ongoing RFI process, which we helped as activists, which Brandon said was not helpful, Kevin was invited there because of our activism. The summit bringing together the ecosystem, the alignment of CMS technology arms, and announcing 5 major initiative lives. The approach is different right now. It feels more like a mindset of a technology company, which is what Clover Health is. I'm excited by the momentum and the mindset of CMS team already and excited for, what's to come. And here's Dr. Oz's team writing, Secretary Kennedy, Dr. Martin, Jay, and my team and CMS, including Amy Gleason, are bringing together a tech developers, patient caregivers, providers, and payers to share ideas regarding to shape the future of healthcare technology, patient-centric focus. And this is a generational opportunity to utilize technology and provide excellent. I mean, doesn't this sound like Andrew Toy? It's like Andrew Toy typing this. Okay. This is like Andrew Toy speaking. Okay. Except to make America healthy again. That's not Andrew Toy. But okay. So so in conclusion, we had somebody critiquing us, saying that we were this was generally ineffective, what we were doing, and saying that we were pumping and doing fake hype. The result, Kevin is at the White House. Okay. Kevin went to the administration and now is able to showcase Counterpart. The point is don't let anybody steal your activism and your voice. You have power. Okay. And the beautiful part is if we are together, we are very powerful. But if we split off and have all side quests, then we're not getting anywhere, right? So I hope that together we could get to a point where you could see the power of the platform we've created and the overall structure. So that's the summary of what's happened, and I think it's fair to take some time and to do this summary, right? So Let's see here. Let me go through the comment sections, and then we'll go ahead and we'll proceed with our analysis for the balance sheet. Okay. All right. So let me go ahead and I appreciate you, Clover Mind. Yeah, there's a lot of good stuff we're putting on these lives, right? Al, please distance. Okay, nice job. Someone mentioned Karen, Clove Counselor, load the boat. Okay, let me see. I'm reading the comments real quick. Bought more today because why not, right? Let's see. I gingerly poked the like button. Hey, Dr. Patel, you're still at work? What's up? I hope you're still at work. Oh my God, yeah, you're finished tonight, right? Oh, I start Monday, by the way. Woo, right? I start Monday. Okay. Oh, hello. Sorry, the stand-up desk here rose up a little bit here. Okay. Don't poke the bear. Al is definitely somebody you want on your team. Well, that's the thing, and he's going to realize that later on. Right? He's obviously a competitor, and he was just trying to hurt Clover. I only get involved when there's a highly likelihood of success. Again, I'm like a sniper. I only get involved until, because remember, I used to play chess, and I was the Arizona. I ranked number sixth place in the national championship in Arizona, and I ranked number 6, which is pretty cool. So I apply chess in real life. I don't engage until I have a clear shot of checkmate, and I responded to him. He backed away. So it's very clear that he put his foot in his mouth, and I was able to clean his mouth a little bit. And now he can just, if you want to have a civic discourse, you can, but don't go ahead and hurt the brand of Clover, because Andrew Toy is working tirelessly with his team on creating something while you're just bad mouthing. Okay. So please have some self-respect. Okay. All right. So, all right, good. All right. So now that we went ahead and do this, let's go ahead and let me see. So we talked about this. So now we're gonna do some real important stuff. All right. So overall, the healthcare market is underweight this year. Wall Street's not even looking at it. Interestingly, if you look at UnitedHealthcare, it's up a lot today, and that's because they just released that they're raising their dividends by 5.2% to $2.21. Now, what's interesting, ladies and gentlemen, is there's something called a payout ratio, which we're going to be talking about. So I want you to keep this in the back. Actually, you know what? Since we're talking about it, let's just do it right now. So they're going to increase their dividends. So unfortunately, a lot of new investors, they don't understand kind of Wall Street. They really don't understand they just don't understand. It's like you're a surgeon and you're operating and you don't even know which side the liver's on or which side the spleen is on. And that's happened before, sadly, right? And the wrong organ gets removed, and that's a very weird thing. And it's happened. I think it happened in Florida. But regardless, I digress. The point here, ladies and gentlemen, is you need to understand the financial mechanics of a company. So let me explain to you. So they're increasing dividends, but what I'm worried about is something called payout ratio. So if you go ahead and activate the financial data and analytics metrics chart and go ahead and look at Clover here, and you look at UnitedHealthcare, sorry. Let's just graph the payout ratio for a sec. If you graph payout ratio, you could see that it was stabilized around 26 to 30, but all of a sudden from 2023 to 2024, something happened. It exploded. So here's the payout ratio here, and you can see the payout ratio went from 30% in 2023 to 52%, and that's a big wake-up call, because what that's basically saying is, first we have to define what is payout ratio. Payout ratio is equal to dividends per share divided by EPS. So it basically shows the percentage of net income paid out as dividends, helping gauge the sustainability of dividends and a company's reinvestment strategy. So interestingly, so payout ratio is equal to dividends, which is in the numerator, and then EPS, which is in the denominator. So if EPS goes down, earnings per share, that means the payout ratio will go up. And what is EPS a measure of? It's net income divided by weighted average shares. So it's ultimately net income, right? And if you look at net income went from 22.3 billion to 14 billion. So 14.4 billion. So net income actually went down. In fact, if you look at our enhanced AI analysis, it went down 35.64%, which is 21.62 standard deviations from the mean on the downward side, which means that their net income has ultimately crashed due to medical costs. And that has obviously took an EPS from 24 down to 15. So because EPS went down, the payout ratio went up. So you're telling me that this happened in 2024. Their payout ratio went to 52%, but now they're raising their dividends. So ultimately, how much of the payout ratio is going to increase? Because the problem is this becomes unsustainable. Now, granted, it shows signal to investors that they're confident that they're going to sustain their dividends. But if you look at ExxonMobil back in 2020, they actually took debt in order to continue their dividends, right? Right. So I would rewatch the video. It's in the beginning part of the video. So there's that, right? And so now what I want to do is I want to look at the extended history, and then I want to look at the payout ratio for the extended. I'm just curious. So yeah, if you look at since 1985 to 2024, the payout ratio has never been above 50%. And this is the first time I've ever seen it. Again, guys, listen. Okay. There's a lot of stuff we have in the background of this platform that I haven't talked about. And it essentially helps dissect, again, it could save you a lot of money, right? Being able to understand this information. The problem is you have to have access to the data in which we do, right? So I just wanted to just respectfully comment on this because the market is seeing it as this, but I don't think this is institutions buying. I think this might be retail. I don't know. I'm going to have to, we have to look at it. But from a 1 month perspective, United is down 22%. Molina from a one month perspective is down 6.39%. Humana from a 1 month perspective is down 7.94%. Clover from a 1 month perspective is down 9.10%. Alignment Healthcare from a 1 month perspective is down 3.91%. Oscar, interestingly, is up. Okay. Now, the reason why I say this is overall healthcare is underweight right now. So I'm looking at the stock price and I'm looking at the fundamentals. And I know the stock price does not equal the fundamentals, right? And I see that and I'm like, holy crap, this is an opportunity. Okay. All right. So now that we talked about this, very quickly for folks, we do have our SaaS sale. It will be expiring in approximately 2 days. Thank you, Linda, for reaching out to me to let me know. So if you guys want access to this, the SaaS coupon code will expire. This is a one-time payment, lifetime access to everything that we offer. Our Stock Trades Premium terminal, access to our generative AI add-on, access to our members that have over a net worth of $45 million, access to our stock terminal Discord, access to a brain machine and over 2.5 billion outputs of institutionally graded data, access to my research, access to the internal Zoom live sessions that we have, access to literally everything, which is by far one of the most cheapest things I think you can find online, given how much value we offer. Okay. So now that we went ahead and talked about this, now what we're going to do is we're going to bring on the iPad discussion. Okay. We're bringing on the iPad discussion, ladies and gentlemen. Okay. Now, before we do that, this is going to be the balance sheet, what we found. Okay. Very important stuff. Okay. And also cash flow. Hey Al, now we need to voice our concerns about the public relations team, which sucks. They need to post this kind of news like you post on Reddit. Holding strong here, taking. So, Noah, I have to disagree with you. I think the public relations team is doing a very good job. Let me explain. Let me give me a moment here. So I understand, everyone is entitled to their opinion. I am just an opinion. I'm a nobody. My opinion is, from my 14 years of experience to now 15 years, I think Clover is doing a fabulous job. They're turning around the business and they're focused on profitability. Right? I don't, Andrew Toy. I think me and him are cut from the same fiber. If I was him, my response to you, Noah, again, I don't speak on behalf of the company and I don't speak on behalf of Andrew Toy. If I was Andrew Toy, I'm just theoretical exercise. If I was in the position of Andrew Toy, which I'm not, but if I was, I would respond to you and say, Noah, I'm sorry, but right now my primary job is profitability. I'm not going to get in front of a camera. I'm not going to go on CNBC. I'm not going to waste my time because that's time that I could spend on to get profitability. Once I get to profitability, then the systems can change. But right now, I need to show stupid Wall Street what my company's worth. So that's kind of what we, ultimately, my thoughts are, right? Hope that helps, right? Um, just reading the comments. It's so funny. Just drinking some coffee here. All right, actually, let's move the coffee here. No. Let's move the coffee here. Sorry. I'm trying to work with this real estate I have here with this desk space. I'm going to get the iPad out. Excellent. No, and that's just my experience. Again, I could be wrong, but I think they're doing a wonderful job. So, it's they just had earnings in May. Like it's only been a month, less than a month since their earnings. I don't know what else you want, right? We're so close, Al, Clover, than ever. We're ever going to been, but yeah. So first off, Belize is our sniper. He usually doesn't come. He stays in the shadows, and he comes in, and he just pop, he just kind of right. I would again, Belize is one of our snipers here, right? Part of the Lifetime crew. Obviously, it's been interesting. I want to say we're closer than ever, and I'm going to show you right now in this discussion, and a reference and citing another discussion we talked about of how Clove is very close. I agree. Now, very quickly, guys, can you help me? Can you hear me when the mic is like this? You guys can hear me? Please comment down below if you guys can hear me. Can you guys hear me? Right, but I got you. You guys can hear me? Yeah, everything's good or no? Everything's good. Can you guys type in the chat? Net cash provided financing. Perfect. Okay. So we'll talk about this on the live. I did mention it in regards. the reason why it was positive for that one time is because they sold one of their investments. But ultimately, yes, if you look at Walmart stock and you'll see what I mean. Good, excellent. All right, good. You guys can hear me. All right, so let's activate this and let's go for it. All right, so we're going to talk about what is occurred retrospective premiums. Okay. Now, very quickly before we do, if you guys haven't done so, I highly recommend watching this video. It's 3 revisions in 2024. It's when Clover Health did 3 revisions and adjusted their EBITDA from like negative 10 to 20 to like freaking $70 million, right? So I recommend watching this because I think Andrew Toy is about to readjust his earnings upwards. I think readjust EBITDA upwards in Q2 2025. So I recommend, if you haven't watched this, then ultimately you're doing yourself a disservice. Right? So like pretty much, right? So all right. So the question now I have is for the folks that are watching, what is accrued retrospective premiums? Now let's just go to the answer. Accrued retrospective premiums here, ladies and gentlemen, it means money that will likely come to Clover in the future, right? Or any company you're looking at, right? It represents amounts of Clover expects to collect later based on claims and costs actually turned out over time. Okay, so what do you see here? Well, this is for Q1 2023. We're going way back, right? Again, this is the type of research we do, which unfortunately, I'm not going to be able to have time to post on YouTube like this. This research, I think this will be one of the last videos. Will be posted on the research ad section. So I'm just, for all the folks out there that are on the fence, our sale will end in 2 days. This is an example of the type of due diligence that you get, right? And the type of due diligence that you're going to be able to do in the future. And you don't take my word for it. You could take one of our members right here, right? All right. Excellent. All right. So now that we look at this, guys, what do you see here? Well, here's accrued retrospective premiums, right? And it was around $70 billion. Again, these numbers, right? 70 billion. Sorry, Jesus. 70 million. 70 million. 70 million. So if you look at this is incorrect. If you look at Q1 2024, you see that the accrued retrospective premiums stays the same. $70 million. So from essentially March 2024 to March 2023, it's the same, right? And again, it's kind of confusing because you're expected to look at here, but again, this is a cumulative analysis. This here to this here, that's a yearly analysis. You don't understand that, and this is why we have the Mastering Stock Market course, okay? All right, so you could see that from Q1 2023 to Q1 2024, nothing's changed in the accrued retrospective premiums. Now, let me show you something. Here's Q1 2025. Look at the accrued retrospective premiums. What do you see? It went up to 84.72 million. So if we go ahead and if we say 84.73, because this rounds up, right? And if you subtract from the 70 that they had before, 70.6, and if we do this math, which is easy math, 84.73 minus 70.6, you get 14.13 million. So now you can say Clover has, and I'm going to call this ARP for the context of abbreviation. Clover has 14.13 million of ARP more than they did from the past 2 years. So if we were to graph this, and ARP is here, this is 23, this is 24, and this is 25. And let's say this is 70 and this is 80. Clover went from here to here. The question is, what does this increase ultimately mean, ladies and gentlemen? So let's go back to the definition. Again, I've been teaching for a long time. So most people are like, what does that mean? What does that mean? What does that 14 mean? So, okay, let's go back to, that's why I have the definition. That's why I put the definition in the beginning, okay? So the definition is accrued retrospective premium, or, we call it now ARP. It means money that will likely come to Clover, or not likely, that will come to Clover in the future, right? It represents the amount Clover expects to collect later based on how claims and costs actually turned out over time. So what this means is Clover, so in long term is Clover is expected to collect $14.13 million more than it ever did in the past 2 years. Does that make sense? This is not rocket science, ladies and gentlemen. So again, but you see how difficult it is? How you can't really, you look at this, and then you go back last year, you look at this, you're like, okay, I don't understand what's going on, right? And then what you do is you take 84 minus 41, and then that number goes to the cash flow statement. You're like, what the hell is going on? Again, there's a lot going on here. Hold on for a sec. Let me. Drop my pen. Okay. So what does that mean? Okay. What does that mean? All right. Well, if Clover's expected to make another 14.13 million, what was the net income? What was the Q1 2025 net income? It was around negative 1.27 million. Well, if you add this expected revenue, what does that tell you? It tells you that Clover would have been profitable in Q1 2025. Basically, this means that Clover would have been profitable, right? Because of this accrued retrospective premium. Okay. So that's actually pretty good. It means most likely next year is going to be profitable, which makes sense because it's negative 1.27 million. And last year was negative 19 million. So of course, if it improves the way it's been improving, we have to break over zero, right? All right. So there it is, right? So we could go ahead and calculate that by looking. To calculate this, we would have to go over the net medical claims divided by the premium, and if we do that for the Q1, net medical claims was it 353 million divided by premiums earned, then it's 77. So I'm not showing the screen. So if you take this here, and if you take the net medical claims divided by premiums earned, then you would get around 77 MCR. So if you increase the denominator, then you would decrease MCR. So to answer your question, yes, it does decrease MCR more. Exactly. You're getting there. All right, good. Excellent. Okay, so then now that we answered this question, so now let's go here. So what does this mean? What does it mean, honestly? We went ahead and talked about it. This was supposed to be the scratch paper where I explain, but I explained it here. Okay? So now let's talk about something else. So, ladies and gentlemen, what is this below? What is this below? This is liabilities related to discontinued operations at $50.6 million. Okay. So 50, they got in Q1 last year, Q1 2024, not this year, last year, they got about 50.6 million of liabilities that are discontinued within the total current liabilities section. They had to pay an additional 50.6 million, which got added to the total. In Q3, that ended up dropping to about $48.9 million in discontinued liabilities. I think maybe they corrected it, but ultimately that's the discontinued operations there for liabilities. Here's the full year, and what do you see here? You see net cash provided by operating from discontinued operations, which is 47.6 million. Which, if we never had that, we would have had 82 million of operational cash flow from a negative 43 million of net income, which obviously I think it's going to be near break even this year. Obviously, we can remove the unpaid claims and you would still be at a higher operational cash flow, but we had to subtract out the operational we had to subtract out this discontinued operations, which unfortunately just gave us 34.8 million of free cash flow to work with, or operational cash flow. So my question to you is what is this 47 million? Where did it come from? Well, if you go to the balance sheet, it came from this: liabilities related to discontinued operations. Literally, it tells you here liabilities related to discontinued operations, and it was around 48.9 million, but it ended up correcting, and it was 47.6 million. So that was essentially. So what is that? If you haven't figured it out yet, it's ACO. That's them having to pay and leave ACO. So they ended up paying that off, and that's a one-time thing. So they're essentially cleaning up the fat, which I talked about in 2022 and 2023. They're cleaning up the fat. So now let's go to. So again, I showed you Q1 2024, and I showed you that this liabilities is here, right? Which is unfortunately 50 million. Now let's go to Q1 2025, which is this year. Do you see any discontinued operations of discontinued liabilities from operations? Yes or no? Yes or no? I'm not moving on until someone responds. Yes or no? Do you see any of this bullshit of discontinued operation liability? Do you see that here? Yes or no? Absolutely. Good job. You do not see it. You do not. You do not. You do not. Excellent. So there it is. So we don't have that anymore. We don't have that anymore. So now I want you to understand this. These are, I want you to focus on this now. Oops. Total liabilities. Okay? I need you to focus on this. If you don't focus on this, then you're stupid. Okay? If you don't focus on this, then you're downright stupid. Okay? All right. I'm adjusting the mic. Okay. Someone said meow. Meow. All right. All right, good. So now let's move on to our financial statement because you need to listen. Okay. We go to Clove and we'll go to the balance sheet and we'll go down here. Okay. Give me a moment. All right, good. So what do you see here? What do you see here? I'm going to take a screenshot. And then I'm going to take a screenshot here. Then I'm going to go to the iPad. For Q1 2024 for assets, which is what you want to have, they had 671.77 million. For liabilities, they had 379.3 million. For Q1 2025, they had assets 583.72 and liabilities they had 247.64. So you could see they decreased their liabilities by a lot. Okay? But also their assets went down. Now let's go to the annual. And I want you to look at this, okay? So it's hard to tell. From that angle, you're like, I don't understand. Let me show you. What do you see here? What do you see here? The assets from 2023 to 2024 were flat. But what happened to the liabilities? Flat assets, liabilities going down. How much do they go down by? 44.68 million. So you want liabilities to go down. Look at AMC. It's not trending correctly. So assets are stabilizing while liability is going down. Okay? Right? So you're laughing because you're like, there it is. You see that? All right. So if you don't get that, watch it a couple times, then you'll get it. 100%, I think. Okay? All right. So, and that's them still having to pay it, right? So there's that. So now that we figured out this, there isn't any more there's no more discontinued operation liabilities that we have to deal with. Okay? And it only increased by a little bit, the total current assets, and that's because they're giving more accrued salaries and benefits, which is what you want. Here's another thing. I'm going to go ahead and read this to you. Okay. On December 1st, 2023, the company notified CMS that it would no longer participate as a REACH ACO in connection with 2024 performance year. The company exit from ACO. You guys can hear me, right? ACO REACH that was made. The company determined that it was not in the best interest to fully. It was in its best interest to fully exit the program following its November 2022 announcement. A strategic reduction in the number of ACO participants, physicians in 2023, subsequent to the 2023 performance year, as remaining activities related to December 2024 settlement with CMS, the prior performance year. So during the 3 months, here, listen, during the 3 months ending in March 31st, 2025, and in 2024. So essentially, let me write this in English. Q1 2024 versus Q1 2025. The company recognized net income of 0 and 4 million respectively. So 4 million was, sorry, 0 million was for 2025. And then 4 million is here. So what does this say? Again, these are in the financial reports. If most retail investors don't read this, right? So what you see here is actually Clover was profitable in Q1 2024, which is why the stock went up, right? But most retail investors didn't catch that, right? The question is, why was it 0 though this year? And I think maybe potentially it had to deal with maybe that accrued retrospective premium, maybe because they would have added another 14 million that it would normally have, but it didn't get. Maybe, I don't know. Flu related things. Again, I'm not too sure, right? But again, you could see ultimately Clover's on its pathway to profitability. Watch that video I had regarding the revisions. Okay. Now let's see how many birds are in the bush. So now you can already start to see B-Rat Cooley starting to kind of put it together, right? Okay. So to do that, what we're going to do is look at this document. So we're going to do some analysis, okay? We're going to do 2 different methodologies, and we're going to look at the difference. And I explained this more in depth in the research edge. I'm just going to kind of swing at this really quickly because this is just the analysis part of things, right? Which we talked about, right? So what we did is we took 2025, and this is Q1, if you don't remember these numbers, right? And then we took Q1 of 2024, and we try to look at the overall change. Okay. Once we found the change, we ended up removed net income and unpaid claims to normalize the data. We normalized the data. And then we took the delta change and we found a total change of $39.6 million. So what does this mean? It means that in Q1 2025, Clover Health made an extra $39.6 million, right? in operational cash flow, OCF. Now, why is that interesting? Because again, I wanted to know the difference between, Q1 2025 and Q1 2024. So if you take 466 subtracted from 318, you get 148, right? If you take this subtract from this, you get a negative number, right? So I wanted to find the difference, and why is this 39 why is that weird? What did they how much cash did they spend in Q1? Well, that's kind of weird. In Q1 2025, they spent $39.6 million. I'm just going to tell you, there's no point in writing it, right? In Q1, they spent $39 million to buy back their own stock. Remember? They spent $18.2 million to buy back their own shares. And then they spent an additional approximately $13 million and above to buy back their treasury stock without having to essentially sell it at open market. So they would rather decrease their cash reserves because they believe their stock price is undervalued. Okay. And that's kind of weird, isn't it? Because that tells me, like, why 39? Because their operational cash flow from last year to this year increased by 39.6 million. So they probably know that they're about to make another 39.6 million next quarter, if not more. So they're able to get that cash back. And we should see an increase in their cash next quarter, from cash from beginning to cash from ending, if that makes sense. So B-Rob thinks that this sounds like they are purposely hiding their profits. No, B-Rob, Clover Health is not purposely trying to hide their profits. A retrospective premium is a metric that accountants use, and all companies have this in their business. If to make that statement, if it's an if and then statement, then that means every other company in the United States is hiding their profits, which does not make sense. So that is a fallacy, and that is incorrect. That is not correct. Okay. All right. So from that, so now that we went ahead and we dissected this, and we realized that Clover now is making $39 million more from cash flow from operations than they did last year. If you remove unexpected claims and remove negative net income, because I think they might be on their path to profitability. Any more of net income, they're going to have more cash flow from operations, right? If you don't understand what this means, then you're heavily disadvantaged in the stock market. And yeah, you may be doing well right now because we're making these videos, but understand that once the spigot turns off and you're flying solo, you will lose your money in Wall Street. They will eat you alive, right? So you better learn this information and take advantage of our sale, because if you want to fly blind, you'll learn like the rest of the folks that have unfortunately said the stock market's a scam. It's not. It's because your knowledge and your data you have is not right. So if you don't understand what I'm saying, this is a big deficiency in your financial literacy, which is very dangerous. It's like flying without an engine. You will. It's not if you'll crash. It's when you will crash. Okay. So I'm thinking right now, what I need to do. Okay. So now that we figured out that they're better from cash flow from operations, the question now is, what is going to be their net income for, so we already know Q1 2025. It's right here, right? It's negative 1.27. The question is what is going to be their Q2 25? We don't have a Q2 yet. What's going to be their Q3 2025? How about their Q4 2025. And then in total, what's going to be the total net income? Again, this is net income. Okay. So to make sure we are humble in our calculations, we know that this number should be higher. This number, I mean, listen, if last year Q1 they were negative 19 and now they're negative 1.27, well, all these should improve, right? But let's assume they don't, because I'd rather be a conservative, right? So let's just copy these three numbers then for Q2, Q3, and Q4. So we'll put positive 7.41 million. We'll copy this here, negative 9.15 million, and then negative 22.09 million. So we add these together, so we'll add the negatives first. 1.27 plus 9.19. And again, I'm using last year's numbers, right? Because I know they're going to be better, right? But I would rather use worse numbers than really good numbers, because I'm not trying to crash, right? I got millions of dollars in Clover, right? All right, so 1.27 plus 9.3 plus 22.09, that's 32.51. Now I'm going to subtract the positive, which is 7.41. So in total, I'm expecting negative net income. Who knows? Maybe it might fall down these prices. You never know. 25.1. Okay. So now that this is the full year 2025, now all we have to do is take 39.6 million times 4 because it's per quarter. It'll give you 158.4 million. And then take this negative 25 and subtract 25.1, because you have to subtract net income. You'll get 133.3 million in OCF. And again, there's no properties, plants, and equipment for Clover. There's not really a lot in terms of cap spending. Look at cap spending. It's like literally less than $1 million. So this is what we call a capital light business. It's an asset like business. They don't really have a lot of properties, plants, and equipment. So it's very asset like. If you don't remember, they use that word in their supplemental slides. This is what it means. Okay. Which is why I was banging on the table back in 2022 and 2023. But, retail investors just don't know. Okay. So there's 133.3 million. Okay. The problem is that's too bullish for me. I honestly, and that's me being bearish with the net income. I would say just take that and divide it by 2. Take half, whatever, screw it. 66.65 million OCF. Now, of course, I think that's going to be higher. How do I know? Well, because last year it was 82 million. Last year was 82 million. The only reason why it dropped is because of this thing here called discontinued operations. And we proved already that there's no more discontinued operations anymore. It doesn't exist like it did here. So technically, logically, Clover should be greater than 80 million of free cash flow this year, or operational cash flow, right? You see what I'm saying? So I think it's going to be, I personally think it's going to be greater than 66.65 million. All right, and this is using our proprietary stock terminal to get the data, okay? So now let's quickly talk about this. I'm going to read this to you. In 2024, company launched Counterpart Health, software as a service SaaS, tech-enabled services solutions to bring power to Clover Assistant technology to Medicare Advantage payers and providers. Very thing I want to basically talk about is Counterpart Health is a complementary to Clover Health and enables company to deploy and expand the reach of its existing technology asset for new potential growth and high margin business opportunity and low startup costs. That's very good. High margin business means that we can collect more of net income, which ultimately will go to free cash flow. All right. So now let's use another methodology to estimate how much birds are in the bush. This one I already did. We did in our cohort. I took the differences in estimates. I'm not going to explain them on the live too long, but I got around $76 billion. So again, right around what we are saying here, 66.65 billion after dividing it by 2. So around really near that $80 billion mark. Sorry, this isn't correct. $1 million mark, right? So then I went ahead and estimated the bull, base, and bear of this, and I'm getting anywhere between 76 million, 134 million. So right on the mark, right? And that's just for 2025. What happens in 2026 or 2027 when there's a positive high net income? Then the net income of that increases all these cash flow from operations, which then increases the free cash flow, which then basically a stock price and the worth of the business of the intrinsic value is the summation of all future expected free cash flows discounted back at a rate divided by the number of outstanding shares, which is equivalent to our proprietary intrinsic value calculation. So with that, there's this. Okay. And let's bring up the keyboard here. So we talked about this. We talked about that. Now let's just really quickly. We talked about this. Yes. So we made a few updates. The beautiful part is now when we look at the quarterly results for Tri-Financial Statement, if you do enhanced AI analysis, you get definitions now here as well. But you also go ahead and get whatchamacallit, the enhanced AI analysis that actually looks at it per quarter, right? There's actually, there's a couple things here. Let me think. Yeah, let me go ahead and this needs one more update. Please do one more update for Tri-Statement Financial Insight Engine. I would like the quarter results to show for enhanced AI analysis. Quarter results. Okay. All right, so there it is. Yeah. So okay, so that's just for me. So okay, here's the cash flow statement. Here's net income. You can see net income actually improved by 93.35 million. That's incredible, right? So that's the improvement of net income, and that's from a quarterly adjusted basis. So you can see from quarterly, and that makes sense because if you look at net income here, you could see, like I said, Q1 went from negative 19 to negative 1.27 million. That's a big improvement, guys, right? And ultimately, it's growing very fast than what you might expect because again, it takes we take care of the math to help you. So I just what I would like honestly what I would like to do is have the enhanced AI analysis determine exactly what quarter it's doing the analysis on. So that's I'm gonna just write that in to help determine which quarter it's landing on. Mhm. Again, I'm the programmer here. I'm doing it's all me, guys, right? So I have to whenever I have an idea, I always have to kind of write it down or I'll forget. That's a good for you guys, good advice, because you'll forget. You have ideas. All right, so now that we did this very quickly, we also added extended history now. So now you'll have history extension. Since 1985, we added this. Now, what I want to do now, really quickly, is I'm going to do enhanced AI analysis. But guess what? Now you have a generate insights button. So now it's going to synthesize strategic financial intelligence. So we're going to wait for the AI to do this. Again, we have our own generative AI model there. As it's going ahead and doing that, I'm going to answer some questions. So your context of hiding doesn't make sense because watch, a legal loophole to negative profits. No, B Rob, it's not a loophole. It's not you're misunderstanding. It's not a loophole. Okay, yeah, you're misunderstanding. They're not out to no that's not right. Right. So I'm going to explain why. Okay. If I was to right now give you $20, but I said, I'm going to give you $20 in 3 months from now. How do you record that? You record that as an IOU. Oh, by the way, here's the AI model. For folks that don't know, this is part of the add-on feature for lifetime access members. If they would like to, take this data and be able to summarize it, literally like a financial advisor. Again, we're not financial advisors or stockbrokers, but it takes in all the data and conglomerates it for you. Again, we've built a platform that is state of the art, right? To where we have even the company looking at what we're doing because it's impressive, right? It even graphs you the gross margins, how it improved. It's very beautiful when we'll analyze it. So back to B Rob really quickly. Okay, so you record it as an IOU. So CMS. So first off, you have to ask yourself, where does Clover get its money from? It gets its money from CMS. If you didn't know that, right? The problem is CMS sometimes takes time to redisperse the money. Like Clover does business and expects money from the government. I think there was like some hack or something happened where the payment disbursements, I think, stalled. They mentioned it in the operations for the earnings. And what's happening is sometimes CMS takes time to pay them back. So what Clover does to account for this on the balance sheet is it communicates to intelligent investors that it has an IOU from CMS or whatever business model it's doing, right? So it's like an IOU. It's not, they're not trying to hide profits. That's illegal. That's fraud. And why would a company hide profits? Again, the point that I'm telling you this, and I'm going to put some pressure on you, B Rob. Okay, I'm gonna put some pressure. Okay. So B Rob, you have a cognitive bias right now. Okay, and this is very dangerous. You're going to end up losing a lot of your money in the future if you have this bias. Okay, so what's your cognitive bias? You essentially take a fact, which is the stock price is down, right? You take a fact, the stock price is down, and Clover is not doing nothing about it. They are, but service level. So what you do is your brain then tries to find any way to fit the narrative. So your brain goes ahead and says, this is why, without actually understanding the overall fundamentals. What is accrued retrospective premiums? Um, Apple has them, I think, right? Every every company has them. Um, and again, you can decide to say, Al, you don't know what you're talking about. Okay, that's fine. Or you can listen, right? This is a cognitive bias. And if I didn't care, I wouldn't be stopping the video, because you invested in lifetime access, right? So, and that we are an educational platform. So I am just kind of shedding light in your, which is why it's important. Again, guys, listen. Okay, so you can go in, you can get a Bloomberg terminal. You can't pay 2,600 a month. I think they charge per quarter, so you end up paying like over 8,000 every 3 months. You go and get that, but what is it going to do to you? You're not going to understand how to read it, and even if you, let's say, try to, you're going to have your own cognitive bias. And the beautiful part is that's why I open access this community. So when people join our platform, you can showcase the due diligence, and it'll allow others to critique your due diligence just to make sure you didn't miss anything. See how powerful that is? Anyway, it's a cognitive bias. It's not correct. And if you were to mention this in a group of chief financial officers in a room, they would look at you and not the way that you want them to look at you. Okay. I'm just, right. It's like a medical student going into the wards thinking that they're Dr. House or what is it called? The House? What's his name? That guy. Okay. Not good. All right. All right. So now let's go ahead and let's look at the AI output. So, we got a rapid growth from 281 to 1.47 billion. So that's an expansion. Sharp decline, though, due to operational challenges. That's ACO. So it's able to pick up on ACO without even having to look at ACO, right? Recovery. So we're recovering. Now we've exploded. Gross profits improved from negative 79 to 368. Gross margins positive 27 in 2024, negative 5. So it signals better cost control. Gross margins improved. You can go ahead and read this, but cash reserves improved. Net debt now is literally near, total debt is zero. They have no debt. Clover has no debt. Total liabilities fell, which is what we talked about. They used to be 835 billion. Shareholders' equity improved from being negative from prior years. Operational cash flow was negative, but it turned positive in 2024, reflecting inflection point. Free cash flow is 33.3 million, first positive since 2018 for the fiscal year, right? And investing reduced capital expenditures from negative 1.5 to 4.47. And here's the beautiful part: stock buybacks, aggressive repurchase of 18.3 million in 2024. That's including their treasury stock. So you can see how the AI catches this and it paints you a story. And then it gives you all this information from 2021 and it gives you the trend. Gross margins went from negative 5 to 26 and it's going up. It's improving. EBITDA margins, negative 38 to negative 3, narrowing losses. Operating margins, negative 43 to negative 3, efficient gains. Net margins, negative 39 to negative 3, profitability near break even. Earnings per share from negative 1.25 to negative 0.08, approaching profitability. Quarterly performance. Again, you see how this, you see how the bull case, it gives it to you, right? Path to profitability. You got strong balance sheet, multiple expansion potentials. That's the power of our platform. So there's that. Also, we just released our financial engineering ratio engine very quickly. Now you have access to all these equations. So this is like, capital expenditure coverage ratio shows, it defines it for you, shows how well operating cash flow covers capital expenditures. A ratio above 1 suggests the business can fund its capital, right? So, again, a ratio above 1, right? It suggests that the business can fund capital projects with operational cash flow. Now watch this. Clover used to be negative 198 in 2023, and now it's 22.39 in the ratio. So the ratio improved by a lot, right? So you can see how powerful this is, how it gives you these calculations. These are about 50 equations. These are all equations. You can look at any one of these equations and see how it's run, right? And then you could do the enhanced AI analysis, and you could go ahead and look at the ratios here, right? We just looked at the what is the one we looked at? Capital expenditure coverage ratio. That's a fun one. So that improved. Wait, let me look at this. There it is. That improved. It's a sign flip, right? And it improved by 111%. That's big, right? So cash ratio improved, continuous operational profits improved, debt service. We'll give some time to this, but you could see this is all improvement, right? You got a sign flips for OCF. It's all improved. All solvency ratio improved, right? Again, you can do, once you do the enhanced AI analysis, you can do generate insights. So this will essentially be able to utilize the most advanced AI systems in the world at your fingertips. And it's able to take all this data, all the equations, and conglomerate them into a very sophisticated fashion. Very powerful stuff, guys, right? So as it loads, let me tell you, we're probably going to make a video maybe once every 2 weeks, maybe once every week, maybe once every month. Our videos are going to go down now. If you guys want to catch me, you could catch me on the Research Edge. I'm starting my clinical rotation, so I'm going to be very busy, incredibly busy, a lot. So I'm not going to be able to make videos, but I went ahead and updated my stock terminal members yesterday. But we released a lot of updates. We really did. And I hope that these videos were of your liking. I really do. But you could see here improving profitability metrics, strong liquidity, all these things, and so there's a lot. And then you could do it for the earnings transcripts, which we're gonna, these are for our paid members. We're not really going to be releasing a lot of this information anymore because I think we've gone to a point where we've proven the service. We've proven that our stock terminal is, knows what it's doing. And I think we've gotten to a point where, this will be a case study for retail investors out there that if they want to break out of the matrix, if they want to way out, if they want to be able to generate passive income, there's a pathway out there. And we have a place for you. Very quickly, for folks, we will be ending our SaaS sale in 2 days. Take advantage. It will expire in 2 days. That's $1,200. That's $1,200 off. That's more than $1,000 off. You can also use Affirm and PayPal for specific region members. Thank you for Affirm for being able to sponsor our platform and being able to cover our platform and being able to help out there. Appreciate you. Also for for SaaS, it's one-time payment, lifetime access. So take advantage. Let's see. Very quickly, in terms of the intrinsic value for all my lifetime access members, go ahead and type in CLOVE. Go ahead and type in what we calculated today, a operational cash flow of anywhere between 70 to 130 million, and put a growth rate of anywhere between, take the average of 9.33%, which was 2024 growth rate, to this year's growth rate, which is 37%. Add those two together and divide by 2, you'll get 23%. Put 23% here, and then these will automatically get filled, and then hit Classics View, and then you'll be able to see the intrinsic value of what Clover is going to be, along with any other stocks, right? So there it is, guys. That's all I have for you guys. And let me go ahead and look at the comments real quick here. So not necessarily, B-Rob. That's very important. Cash flow from investing activities is not cash flow from operating activities. The statement of cash flow is separated into three concepts: cash flow from operations, cash flow from investing, and cash flow from financing. They actually spent cash and cash equivalents to buy back shares. Net income does not show up on cash flow from investing. It shows up from cash flow and operations. So I hope that makes sense. Okay. Yeah, I would say it can. You might have some trouble for the quantum chart. The quantum chart, you might have some trouble in some aspects of it, but I would say you can. Yeah, I would say. And I would say an investment in a newer computer is probably good, given that we're in the technological era and you're invested in an AI company. So it's probably in the best interest to get yourself a newer computer, right? And this is our quantum chart real quick. You can see very quickly, we've talked about this, institutional ownership. You could see, look at the investor holdings. Look at the amount of hedge funds that have purchased. It's more than has ever been recorded in the history of Clover. I've never seen this many hedge funds buy Clover. I've never seen this many hedge funds and institutional investors buy this. It's never been, as you can see, this was 2020, right? This is a completely different company than what it was 3-4 years ago, right? Hedge funds know this. The institutions know this. I know this. And everyone on our Lifetime Access know this. And because we published our work here on YouTube, you guys know it. So we're going to be slowly pulling away from YouTube and restricting the information we put out now. Sadly, I have to say the spigot of information is closing down, right? Because again, I'm busy. I need to do medicine. But I'm going to be on my Lifetime Access platform doing research because that's for me, right? I like to put my research in one spot, and I created a platform that I like to use rather than using Bloomberg. In fact, I have a Bloomberg terminal. I'm thinking of canceling my Bloomberg terminal. I think I'm going to cancel it in the next couple of months. I'm going to remove. I don't need it anymore. I don't need it anymore. I have my own platform. So that's honestly going to save me a lot of money. Which is why Lifetime Access is cheap, right? Right? Because I'm going to end up, it's going to end up correcting itself for me. But we will do that due to the fact we keep innovating. We will be increasing prices. I think the next price increase. So once we remove this sale, prices are going to go back up to 4,000. And then when we go, I think it's yes. In the new year, we're going to be increasing prices again, and it'll be $4,900.99. So it'll be around $5,000 for Lifetime Access. So we'll be increasing prices. That'll be in the new year in 2026. We just increased prices just a few months ago. From 3,000 to 4,000, and then now we have this SaaS sale that's going to end in 2 days. So we've made the videos, we've shown the concept, we've shown and we've proven the our work. You've seen that you have Clover Health now he left, enjoying our videos, right? Which is a shame. It's a shame I can't keep it up anymore. I'm busy, and I have I have to respect my lifetime access members, and I have to give them time. So we're gonna be on my lifetime access members, right? But yeah, we've shown the concept, and we've put in a lot of hours on YouTube. We'll come every now and then, but the hours will be limited now. As you can see, this week I only made 2 videos this week. It's going to be heavily limited, okay? But overall, there it is. Appreciate you all, guys. I tried my best to showing you, stuff that I understand why, though, why our educational system doesn't teach this. It's bullshit. I don't agree with it, but at least we're in a free country where I can do something about it. And I did. I created the platform, and I'm about to cancel my Bloomberg subscription. I'm about to cancel my Bloomberg terminal because I don't need it. I don't need you anymore, guys. Bye. I don't need you, right? Done. I built my own platform. I don't need it. Done. And we don't need it. That's it. We have everything. We have everything we need. We have everything we need. See here. You have done more than enough on YouTube. Lifetime members are thankful. God, I appreciate you, Clover Minded. I put in a lot. I mean, here, let me show you. Yesterday, watch this. Yesterday, oh yeah, actually, let me give you guys one more. This is the Research Edge. Let me give you one more thing. So this is the type of research we do. We do it for other stocks as well. Silver and all this other stuff. We talk about a lot on the stock terminal. So this is a head of finance of Clover Health. But watch this. He used to be a senior analyst in Citibank. So what Clover's doing now is they're hiring people for the head of finance, it's playing the treasury stock here, to speak Wall Street's language, right? That's why I'm confident, right? But look at this, right? That was at 11:31 p.m. And then I posted this at 3:21 a.m. Right? And then we got members that gave us they had a question. We have a support ticket system here. Oh, cheers. Okay, good. Oh, wait. Carl, I'm going to have to message you, Carlos. I don't know if it Google seems to work. Interesting. We have members watch this. Let's look up transcripts. This is our support. We have the best customer support, I would say. Jonathan said, hey, I was like, hey, Al, need your help. This was at 3 a.m. in the morning. There's a issue, missing Q1 data for 2025. He responds to me 3:09. I respond to him at 3:13 in the morning. In the freaking morning. That's what. Obviously, it's not going to be like this for every response, but that's a 4-minute. That's a 4-minute response. I'm like, perfect. Thank you for reaching out. When did they report? I got it. Boom, boom, boom. Within 6 hours. It is my great honor and privilege to inform you that the error has been resolved. You now have access to Q1 2025. Here it is. I don't know why it's not. That's I don't know. I don't know what happened here. That's weird. Let's open it up again. I zoomed in too much. I couldn't zoom out. And then, he said, thank you. Of course, anytime. Ticket closed. Right. And we have a transcript here. It works. So for some reason, I don't know why this Microsoft Edge doesn't work. So I'm going to add this to myself here. Note to self, figure out why Microsoft Edge is not working. It works for Chrome. I don't know why it's not working for. I'm going to have to figure it out. It may be a computer specific issue, but you can see how we solve the problems very quickly. Our customer service is very strong. So now we're going to send this over to transcripts. So now people can review what we talked about. It's an open dialogue so people can see what other questions people had. Then I go ahead and I delete this and I close the tickets, and then it loads, and then once it's closed, it's removed and there's no more tickets. That's customer service, right? Right? Yes, so you are one. Oh my God, we had like 200 signups in the past like 3 weeks. Lifetime access months ago. I just have to integrate. You're one of them. Integrate. Right? So we have so many people that have not joined the stock terminal Discord. We had like over 200 people that joined 3 weeks ago. Like in the past 3 weeks, 200 people have joined and only like 3 integrated. I get it. You're trying to seal the deal before we raise prices. But dude, integrate. Come on, Craig. Join the family. What are you doing? Right? Exactly. You're missing out on all the deal. I mean, sorry. All the you're missing out on all the fun. Hopefully, right? You're missing out, man. You're missing out. We're missing out. Oh my God. Yeah, Al needs a shirt that shows the ChatGPT answer to why financial literacy isn't taught. It is so criminal. I need to take a screenshot of that. It is so bad. That really hurt my heart. Even the AI knows. It's a reflection of us, isn't it? Yeah. Something. All right, guys. Well, I hope you enjoyed the video. Lots of research we do. As you can see, we are a real platform. I believe next month will mark 4 years. 4 years of business in the Al Stock Trades platform. Soon to go on 10 years, right? So very excited. We're hitting our 4, soon to be big 5. Very excited. We've grown a lot. We've done a lot, and the platform speaks for itself. So best customer service. We destroy everybody out there, right? I've analyzed. Again, guys, I came from nothing. I came from homelessness. I didn't have a typical mom and dad, right? So like Jeff Bezos was like my dad, right? If that makes sense. I look up to Chamath. I know people don't, but I looked up to these people because I didn't have a lot of people to look up to. So I learned a lot from Jeff Bezos. He says that customer service, it's all about customer service. I'm happy to say it, and people can lifetime access members, please say something. I try to make my customer service. When that video, he with his cracky voice, we just focus on the customer service. That's exactly what I do, right? It's all about customer service, right? Mayo Clinic, the needs of the patient come first. I just remove the patient and say, hey, the needs of our lifetime access members come first, right? So, and I hope you see it, right? And of course you do, right? It's very obvious. You guys know how much I care, right? You can tell when someone doesn't care. You're dropping hard-earned money to join this platform, and you took a leap of faith. And when you get in, you'll realize that it's no longer a leap. You'll have a diamond guard-railed system bridge that is sturdy, that can withstand any hurricane that I built for you. You'll have people that are there, regardless where you are in life. I personally think I think my platform. our platform is a great cure for depression. I mean, I found myself a lot happier, to be quite honest, and I think other members can reflect the same thing. Right there, it is. Right now, I appreciate you, Chan. Appreciate you. You are always responsive. Michelle must hate us. No. We need to get her a gift. No, I mean, Michelle, honestly, man, she's so busy in med school. She's in med. By the way, Michelle's in med school. So whenever she's with me in these videos, she's yeah, the only time we have off, I make the video, sadly, but no, she's coming with me to Tucson, and she'll be studying, and I'll be in the hospital, and I'm excited. She's studying for step 1, and I'm excited. Yes, the fact that you respond to DMs means a lot. Yeah, I'm here for you guys, right? I'm here. I'm here, right? You paid hard-earned money, and you took a leap of faith, and there it is. You guys, then it's all about the customer. It's all. What did Jeff Bezos say? Oh my God, let me look up the obsession. Let me see what he says. I'm honestly curious. Oh, I love his face. He's like leaned in. He's like so invested. He's like leaned in. He's like, it's all about the customer. Customer upset. He's so cute. Look how he's leaned in. Look. Oh, I love this. Look. Let me share the screen here.
Maybe more. But I believe that if you can focus obsessively enough on customer experience, selection, ease of use, low prices, more information to make purchase decisions with, if you can give customers all that, plus great customer service, and with our toys and electronics, we have a 30-day return policy. If you can do all of that, then I think you have a good chance. And that's what
I think you got a good chance, right? That's what I aspire to. Yeah, Jeff Bezos' customer obsession, 1990. That's the video title, literally, right? So that's my goal, right? How can I obsess? Like, let's how he talks about the customer, right? What I mean? So I'm having a great time, guys. Dude, I couldn't do it without the Al Stock Trades fam. The fact that we see ourselves as a family. Culture doesn't start from the bottom; it starts from the top, right? And the way I devised this and the way I created this, I created it where Republicans and Democrats can get along, right? And if you don't, you guys have to fight, right? Right? We built a platform where Democrats and Republicans can all have one common purpose. Let's make some money, right? So right? Oh, there's the dogs. Whoa. All right. So, whoa, hey, wait. Hold on for a sec, guys. Little crazy dogs here. Holy moly. What in tarnation? There it is. Huh. Crazy dogs, I tell you. All right. Now I know why there's no screen. There it is. Okay. What happened to the screen? Let's see. Yeah, there it is. Al walked me through the integration process. Thank you. That's what we do, right? It's what we do, right? It's what we do, and it's what I try to achieve. And, it's what I like to do for my patients, right? When I talk to patients, I want them to feel like they're the only patient in the hospital, that there's nothing going on outside. When I speak to patients and when I give them my time, they're like, isn't this guy busy? Doesn't he have other things to do? But that's the illusion, right? Is when you're able to speak to someone and actually give them your full attention, you win. It's you have the best patient experience, right? Because patients don't have the medical knowledge to determine, how good of a competent doctor is. Maybe some do, but the one that they focus on the most is how you make them feel. And that's what I strive to do. That's my mission, right? So in any case, love you all. God bless you all. And I will see you on the next one.